The Nasdaq 100, the S&P 500. I feel like these are kind of the best words to hear on a Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, morning, afternoon. I don't care what day it is. I just love hearing those words because it means we're probably going to be making money. Now, we had a lot happening this weekend. We had the S&P move really good into the weekend, having the breakout, which is a focal point of this video. We had Biden, yesterday signing through the debt ceiling bill. We had some T-bill issues, a lot of confusion, a lot of talk happening there. I'm going to show you exactly what happened the last time we got strapped for cash as a country at these levels. It was not too long ago, and you're going to be surprised when you see the answer. So I want to attack that. But before I do, I want to show you guys something. And this is in no way to say, look how great I did or anything like that. You don't see me often post a lot of personal profits here on the channel because I don't think that's what the channel is about. The channel is about showing news, showing opportunities, and ultimately trying to help you guys get in a position, right? Just giving you a little bit of alpha, a little bit of edge in the market. But this is my personal week from trading, right? Now, the total trades, sometimes I would hold them overnight and, they would go over, so it would counter trade for the next day. And so the profits are a little bit wonky here on TradeZella, but it tracks my account over at Interactive Brokers, which is the best broker that there is right now. Arguably Fidelity, maybe Lightspeed, but that's about it. This was my week so far. It was around 22, give or take. Amazing, amazing, amazing week, right? But I want to let you guys know, it's not always that great. It's not always that fantastic. But that's why when I say there's opportunity, I try to make it as clear as possible where those opportunities are. Okay? Now, again, we're going to be talking heavily about Yellen, these T-bills going through. We have Biden as well, raising the debt ceiling. We're talking about that. And then we had some crazy, crazy, crazy news. And again, we're going to cover all that. But before we do so, I have to ask you to consider doing two things. Liking and subscribing. It helps out the channel so much. And I appreciate all the love and support. Guys, I don't care if I'm getting 2K, 3K, 1K views a video. I'm going to make videos every single day, Monday through Friday for you guys. I'm trying to come back to Sunday videos and more fundamental to help you guys get educated on the market as well. But that's what the goal of the channel, guys. It's not about buying clicks. It's not about you guys having to pay to show up. That's why we have the newsletter. The newsletter was this morning. If you didn't get it, it just dropped. You try to get it now. The link is down below. Try to get it. But again, it just dropped. Pay attention. If you guys want to take that next step and you want to try to go out there and get around a bunch of traders like yourself, if you're trying to do this full time, I recommend Discord. I do. But if you're just getting into it, I don't recommend joining, to be honest. This is not a signals, a get rich quick or anything along those lines. Yes, we post what trades we take, how we take them, why we take them. We're in voice chat, walking through the market. But it's not this idea of follow, get rich. It's a very much community of individuals that are pushing each other to learn, get better, and stay accountable along the way. That's why I think the success has been so good. That's why I believe we're almost to 1,000 members, which I'm so excited about. But again, just growing the community and trying to build something great for you guys as well. So let's jump in. Now, first thing I want to talk about is obviously the Nasdaq. And in this video, I'm not going to do too much charting. So if this is like a charting video, peace. Sorry. We're doing more fundamentals here on Sunday. But I do want to highlight a few of the major levels here on the Nasdaq, and we'll go into ES as well. Now, the Nasdaq, you can see we had our highs from September, our highs from, late August, our highs from August. And then we had our, the April level here, and then pushing back into these April highs about right here as well. So let's just look at how we've reacted. So you can see where all those levels are from, those pivot, swing highs that we had while we're making lower highs and lower lows. The first one, you break, you mount. The next one, reject, break, mount, break, mount, break, mount. So what are we doing? We're stair stepping. This is the fundamental view of how we trade with price action, supply and demand. Beautiful, exactly what we want. It looks really good for continuation so far. ES is the absolute dog. This is the one that we're most interested in. And I'm going to talk more about this later in the video. Now, giving you a visual, these are my main bullet points. And you guys like this stuff, so I try to go back to what you guys like. Leave a comment if there's stuff that I haven't covered lately that you guys would like to see me cover in the fundamental videos. I would love to see those and definitely get feedback on that. So if we're looking at what's happening here, the bullet points, the debt ceiling, T-bills, I think those are a little bit different, and they are different. They're totally different. But I think we need to talk about them. 2, the Fed tone. The Fed tone has been interesting, and there's a reason the Fed has been so quiet. I think this Fed this week, it's a blackout week. So the fact that the Fed coming into this week, we're seeing more of a maybe pause coming. It's been back and forth. So I don't even want to jump to that conclusion yet because we have a little bit of time. But again, I do think pause is still on the table. I do believe it's still on the table. Number 3, short covering and how this could really start spicing up specifically on the ES and on the Dow. Now, when we go in here and we're going to look at a few things really quick. The first thing I want to talk about is what's happening with T-bills. And everyone keeps highlighting T-bills. They're like, look, this is the down case. This is bad. This is going to destroy our market. Okay. I'll have this link down below if you want to check it out. It's an okay read. I think it's going to complicate and confuse a lot of people. Okay, I want to say that. But what I want to do is I'm most interested, and I like to see what happened when there's exact instances previously. So if there was like a housing market crash, I would want to look at, was it very similar to 2008? Was it different? Well, when we start getting stagflation, is it the same as the 1970s, right? I want to see exactly what's happening so I can compare and contrast. So, and I will say this is different than 2017. This is 100% different because of where we're at and what pushed us to this point. We have to agree there's a difference. But let's just see. Meanwhile, the government continues to run out of cash. As of Tuesday, this past Tuesday, the Treasury General account held $37 billion, having held $140 billion mid-May. The cash reserve is at its all-time lowest level since 2017. And again, they wouldn't be able to sell these T-bills unless the debt ceiling got raised. That's important to understand as well. So, what happened here? Well, everyone's saying, well, this could spark, downside. This could spark this. And maybe it could, 100%. So I'm going to go to TradingView because I just highlighted, exactly where this happened before. This is the weekly time frame. This bubble is September 2017 when this happened. Okay? I want to make sure so you can see September 2017. Okay? Not fudging the numbers, not making anything up. Right? So September starts locally right. Let's just say you start, you dip down a little bit on the SPY, and then you just proceed to make not only new highs, not only do you proceed to make new highs on the market, maybe when people thought we were going to run out of cash, right? You mount August highs there, and then you proceed to push from 250 into 288. Again, right? How big of a push is this? Why does no one want to talk about this potential possibility? You pushed up 15% over the course of the following months from October into January. Okay, over the next 3-4 months, you went bonkers. You went crazy, just straight up. Right? That's what happened the last time this happened. So again, based on where we're at when we were at these same levels, when we started getting bailed out, when we raised the debt ceiling, when we encouraged more spending happening here, that's what happened. What I will say is, rates weren't this high in 2017. That wasn't an issue. Inflation wasn't a end-all be-all issue. Okay, there was a few things that were happening, but I will say that, right? We need to understand the differences that are at hand and at play here. Okay, so just take that with a grain of salt. It is what it is. Now, we also have to assume if they start flooding the market at these, that this will affect yield prices. Okay, we have to anticipate that. That's probably why you got this spike here on what happened specifically on the day of Friday, right? So when Friday, we, obviously get that nice spike there into Friday. Boom, right? Passes the Senate. Short-term bonds really, really firing off. Now, again, we're really interested here on the daily time frame. We want to see these bonds start to trickle back down. Now, again, for anyone saying this and you're looking, well, Tyler, couldn't this continue to spark? Could these bonds continue to rise? They could hypothetically continue to rise. I do personally believe, in my opinion, in my loins, in my bones, that you will start to drop, especially if the Fed tone of a pause is the narrative pushed based on what's happening. We already talked about what happened with unemployment as well. Unemployment rose 3.7%. from the expectation of 3.4%. You know, this isn't great news. I'm not excited to say it. I'm not excited that, you know, people are losing their jobs, but this is what we needed to happen. Okay. Like I was compared to birthing pains, right? It is what it is. You have to go through the bad to get to the good. It's the way the market goes. So it goes really good, goes really bad, really good, really bad, over and over and over. But if we stay consistent and we stay true to what we know, what do we know? Okay. What do we know? And I will highlight in 2017, going into September, you can see you did your bonds did end up, and your yields ended up rising into January and for the next month or so into October, November, and then going into basically 2018, you just started free falling down, and then of course 2020 you dropped. So you had a short little span. You had a span of upside. Sorry, this is for the next year, give or take, of upside, not a month. Sorry, misspoke there. And then boom, you got tanked off. So I'm very interested to see what happens. But we also have to understand that we've also gone absolutely crazy here on the bonds as well and yields. So again, they're different in the sense of they've already ran so much. Could they keep going up? They 100% could. 1,000% they could continue going up. But again, I'm not banking on that because of what's going to happen with the pause. And we know if there's an expectation of a pause and then there's an expectation of a cut, which I don't believe a cut will come this year, that will negatively affect yields and that'll start pushing those down, in my opinion. Okay. So short-term yields, I think they're a little bit up in the air. Over the next few months, I do believe they have downside. Personal opinion. Okay. Next up, debt ceiling. Okay, again, Biden signed into place. Your question now is, I know you're here, you're like, Tyler, are we making new highs? Are we breaking out? Are we going crazy? I can't give you an exact answer on the fundamentals of it if we're going to, you know, open up tomorrow or even open up to today with futures and just go parabolic and go crazy, right? I would be lying if I gave you a direct answer. But what I am going to tell you is you look really good from a market perspective. Okay. Why? Unemployment. I think unemployment is something that I don't know why we're not talking about it more. That's like what the Fed, that's like one of the last few things the Fed needs to see. Unemployment going up. Raising the debt ceiling. Again, bailing everyone out here. Okay. On top of it, shout out Spot Gamma. But we started to see what was happening here. Okay. Friday was the second largest SPX call volume ever on the contracts, okay? Now, it's interesting, right? The only other case was, you know, October 13th this past year, the CPI rally day, okay? What's very interesting about this call volume is remember everyone was talking about VIX being in a wedge? And I told everyone, I was like, look, we've been saying it for weeks here. Trending at 17, 16 is not bearish. Okay, when you're at lows on the VIX, it's not a chart. It's not an equity, right? It's not a wedge. It's not going to reverse. It's not going to find support and bounce. It's all based on derivatives. So it's interesting that we find one of the, just absolute bloodbath on VIX going straight down. Again, going back to the last time we had this in October, look what happened in October. Boom, shot down. We had that massive rally. Again, so when we see this volume kicking into place here, it's very interesting where VIX is. What was VIX doing back in 2021 at these levels? We talked heavily about this in the past week. VIX continued to push all, SPX and Nasdaq, and Dow. All-time highs, nonstop when VIX was at these levels, okay? Now, there's an area to get concerned about VIX is when you start getting over 18, maybe 19. I really think 20, but, if you start to get a bounce at 18, 19, it could get interesting. But still to say, is VIX is at, look, I mean, you are looking like you want to really get the case for 11, 12 because everyone's just flooding back into the market. Now, is FOMO a thing here? I think it is. I will say, I think FOMO is a thing here. I don't think you should over leverage. I don't think you should go all in. I don't think anything along those lines. You need to do your own research, do your own DD. But what I will say is there's still a lot of names in the market that are undervalued. Everyone's talking about, NVIDIA being at all-time highs, Microsoft, I think it's going to break all-time highs and go to new highs. Apple, right? Everyone's talking about these. But what people aren't talking about, right? What people are not talking about is what's happening on stocks like Amazon. You have a lot of room to highs, right? Do you not? Google, still have a lot of room. Okay? And you can even go down to maybe mid caps, right? You know, you have some stocks that are just at lows. PayPal, right? I don't love them, but yet they acknowledge where they're at. Square, right? Some of these names that were killing it, they're down. They're reporting decent numbers, right? Costco, Walmart. Walmart's pretty high, right? But you're still, you can go through and see the trend of what's happening here. Is that some of these names still have a lot of room to go, and they might just be getting started, right? That's what we saw what happened with XLF. What happened with XLF when the debt ceiling went through just this week? XLF started to get immediate support. On the daily, what a candle. What is going to happen to the SPY? What's going to happen to the Dow when these names that are being held down start to get some love in them? I'm just saying. SPY will erupt if you start to get banking sectors rebounding. Energy, healthcare, rebounding. Construction, manufacturing, rebounding. This is healthy movement of what you're seeing. We saw even on Friday with the Nasdaq here. We saw some consolidation, if you will. You know, you did push back up, but we saw just consolidation at highs. But where did all the love really go to? ES, SPY, the Dow, rebound of a day. You saw a little bit of a rotation, and that's the beginning of what you want to see. So I'm not convinced this week that you have to pull back or you have to get hammered or that there's this mega crash coming. I'm more enticed and I'm more interested in seeing, can this rotation really take place? Because if we can start seeing an actual rotation happening of where Dow and ES get a little bit of love, they slow down, and then tech starts to go, then you're looking for a crazy outcome. Then you're looking back at 2021 and you're saying, this is interesting, okay? And the last thing you want to look at here too, again, I kind of failed to cover it, was IWM. IWM has been trading in a range since past the last March, over a year now. Okay, or no, this is this March, but going all the way back to last year as well, you can still see. You just continue to bounce at this range. Continued over and over, 170, 166, over and over, small caps, mid caps, continuing to bounce here, right? And since March of this year, this is where you've been consolidating. Again, pulling up to 200 SMA. Look what happened on Friday. You mounted above it. You do have the 200 MA on the weekly right there as well. If you get above that, I'm convinced IWM and the market is really ready to rock it as well. But again, understanding where we're at, what's happening, the actual rotation, and if a rotation continues to take place, what it means for underlying equities, stocks, and the market in general. That's my opinion. That's what I'm viewing. If you have questions, leave them down below. I'll see you tomorrow.